Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, into the action we go on Fed Day. And again, this morning we had a ton of news. GDP came out a little bit better than expected. ADP private sector jobs came out a little bit better than expected. That pushed the markets up early here in the day. We then saw a nice sell-off into the FOMC policy statement at 2 p.m. Eastern Time, at which point the markets whipped all around. Initially, we popped up, then we dropped into the 200 MA, and since then we've made a new or hit the double top. We didn't make a new all-time high on the spiders. We came 1 penny prior, and then we're seeing a pullback. But this is a beautiful double top pullback right here, folks. Bottom line is, the Federal Reserve comes out super dovish. They downgraded U.S. economic growth to modest, which means more printing of money. The Federal Reserve here, you can clearly see the market started to dump. They came out with POMO money. There was no POMO scheduled today, but it's important to understand that all the Fed has to do is make the right call. The markets go up, and sure enough, they have everything locked in place, just like the bubble would dictate. And again, I'm being somewhat facetious here, somewhat comical, because it is kind of funny in a weird way how you can see the markets begin to dump out, and then just miraculously they turn on a dime when that POMO money comes in, that bank starts buying and propping the markets up based on what the Federal Reserve wants. Federal Reserve obviously wants the markets and the bubble to stay intact in the short run. So again, bottom line is, markets aren't up that much today. We're just up a point on the SPY. Dow Jones Industrial Average is up about 55 to 56 points. S&P's up 10 points. Nasdaq's up about 23. We're up about 1/3% on the Dow, 0.6% on the S&P, and about 0.8 on the Nasdaq today. So a little bit of an update on Fed Day, but the big story of today, in my opinion, is the whippiness. We're seeing some crazy action here today on not only the S&P 500, which you can see right here between the big moves up, down, and all around, but also on individual stocks like MasterCard. MasterCard's back up $12, but MasterCard crashed intraday, folks. MasterCard came down and went to 567 after opening and hitting a high of 626. I mean, think about that move, folks. You're talking about literally a 50-point plus swing on MasterCard from the highs to the lows. In fact, it's close to 60 points. And you also saw this same move on Visa. Take a look at Visa, guys. Visa had a high of a day at 195, and it hit a low today around lunchtime at 171. That is huge. That's like a 12-15% move down in a mega cap stock. And the reason why I tell you guys about this and bring this to your attention is because the action in these stocks is, to me, very kind of telling about what could happen to the markets. When you have an artificial market where stocks like Visa have gone on and straight up. Look at this chart on Visa, guys. Just going back to 2011. Look at that chart. All right, if you want to go back even further to 2009 lows, this thing was a $40 stock. If you have a chart like this that is parabolic in bubble territory, and some little thing goes wrong, like with the credit card companies there, the feds basically said, oh, you can't charge this fee in the future, whatever it was, a minor fee, not the end of the world for these stocks, but because they're priced to perfection, it sets up for disaster. And again, as day traders in the intraday stock chat, we made tons of money on Visa and MasterCard today on the bounce and so forth, which was great for us. But the average person who's sitting here, that's not within themoneystocks.com. I mean, literally think about what they might have been doing here, trying to buy it maybe here or trying to buy here. I mean, literally getting their head handed to them. And that's what you have to kind of keep in mind, folks. That is unbelievably scary. And again, the markets, honestly, at some point, they're probably going to do this because the markets have the Visa, MasterCard moves have been very reminiscent of what the markets have done as well. I mean, obviously, there's a reason why those stocks are that high because the market's gone virtually straight higher. So, having said that, guys, again, Amazing moves, great day trading action for us at InTheMoneyStocks.com. We love this stuff. We love this game. We love how things are dropping and popping and so forth because it gives us opportunities to make money and be in and be out very, very quickly. So for us, it's great, but I do feel somewhat bad for the average investor or the average trader who's trying to trade things like Visa or MasterCard or even American Express to some extent had a huge drop from the highs to the lows today. By the way, American Express, we didn't get triggered on it, but this was a swing trade alert a few days ago because this bearish pattern was just a thing of beauty. Oh, another chart here, guys. Take a look at this. Take a look at DuPont. DuPont, guys, was a great setup based on PBT methodology. Right here, time count, topping tail, and master resistance right here. You cannot ask for a better setup on a short play on DuPont. And look at what happened, guys. This thing literally collapsed back down. All right, literally collapsed back down. Unbelievable drop on DuPont. We shorted it literally right up here, guys. Right up here was our short, and we have ridden it all the way down. Actually, we still hold it as it's a swing trade, but I mean, this is just a beautiful example of the PPT methodology working out. Let's take a look at the spiders, guys. Again, spiders have come in very nicely off that double top. Really a whippy trade here today. SPY is just up 95 cents now. It's still up a lot or a fair amount on the day, but I mean, this is just wild trading. Wild trading. This trend line's been very telling today, this upsloping one. Consolidated, popped, got below it, came back to it on the Fed, pulled back, then popped above. Now we're pulling back to it again. So very interesting little trend line right there. Okay, so that's what we're seeing right there, guys, on the charts. I'm just trying to see if there's anything else out there that I want to mention to you guys that I'm seeing. I don't really see much, though. Chevron, again, Goldman, JPM. Financials are actually having a pretty good day off the Fed. Take a look at JPM. JPM popping up, just hit the highs of the day right here. If you look at the charts, though, JPM is not hitting the all-time highs, which is right here on the chart, while the spiders kissed the double top. So we do see an overall lag on JPM, but in comparison to the S&P, you know, it's still a good day for the JPM today. It's just in comparison, it's not doing as strong, or it's not as strong as the SPY S&P 500. Goldman Sachs, nice pop today, up 287. Apple's stalling out a little bit. I think Apple needs a break after 4 days up. Looks like it needs to pause. Look for consolidation on this. It should start to head back higher in the short term. All right, a couple other charts to take a look at today, guys. We are watching Tesla very closely. Tesla's up $3 today after that big reversal yesterday. Keep an eye on this. To me, this is creating a bearish pattern inside of this move down. We shorted it yesterday right here. It was a great short, and now you're getting that inside bearish pattern of consolidation, so that'll be something interesting to watch as well. Amazon's flat on the day to up $1. Nothing doing there. Exxon, Chevron are up a little bit on the day. Overall, again, guys, markets are up, but considering the dovishness of the Fed, I'm actually a little surprised the markets aren't up more than they already are. Right now, again, up 95 cents on the SPY, barely holding on to this little pivot. And that's after the Fed said everything right. Not only did they say everything right, but they came out and basically said, we're going to continue to print money because we're downgrading the economic viewpoint. So if they're downgrading what they think the growth will be for the U.S. economy, obviously that insinuates that they're willing to print even more money. So considering all that, why aren't we up $2 on the spiders? Why aren't we up 20 points on the S&P 500? 20 points would just be a little over 1%. We can't even get 1% out of this market? Really? So again, just these little things, stick in my brain and make me aware that we need to pay attention and be understanding of where the market sits, be understanding when we see stuff like Visa, MasterCard collapsing. Obviously, we'll trade it, but I want to actually, what I would love to do is be on the right side of that type of collapse. If you're going to get a 10% drop in the markets in one day, I want to be short the market for that day, right? And then I want to buy it when it's low and get the bounce back as well. So these type of things we want to be aware of. Definitely keep an eye on them. Markets, again, up 91 cents. We're starting to creep back in. I still think the markets probably will end positive today. But if we actually sell off, and if we were to come back down in this area, kind of right where we were prior to the Fed, by the end of the day, I think that could be very telling for the future couple days. I actually would be bearish if we saw that action. So these are all little things that we want to pay attention to, guys. Market's now selling even more. Interesting. So again, I'll analyze this as of the close today and give it to my members here at InTheMoneyStocks.com so we can trade it over the next couple days. But really, as of now, very interesting price action going on. Spider's just up 85 cents. S&P 500 is coming in very nicely as well, guys. Just up about eight points or so. So something to keep an eye on here. But bottom line, again, very intriguing action from the Fed today. GDP number was slightly better than expected. Although one thing funny about the GDP number, they recalculated how they calculate it. So it's funny how when the numbers aren't that good, they start saying, "Oh well, let's calculate it this way instead." Just very very interesting how they change things midstream when it suits to show better growth. Kind of a little bit of a nervous, in my opinion, I'm nervous about that too. If that's what they have to do to show a little bit of growth, what would be the real numbers if we really knew the real numbers? It's kind of like with the jobs data. They report jobs and the unemployment report, right? But if you worked one day that month, you're considered employed. Does that really make sense? So you're telling me if I got hired one day for a one-day job, and I really want a full-time job, and then I'm employed. That's what in employment I'm not counted as unemployed. If you're counting people that have part-time jobs, well, they count it. That's not in the unemployment. Yeah, they might want full-time jobs, but they can't get it, so they're taking shoveling snow for a day or two. Well, that's part-time. You're counted as employed. So these type of things you have to wonder about when the merry-go-round or the musical chairs will stop. But right now, Ben Bernanke seems to have it under control, at least for now. I do worry about things like MasterCard and Visa, though. Those type of drops, guys, I'm telling you right now, mark my words, over the next probably 6 months or so, you probably will have something like that. All right, into early next year, I would not be surprised if there's something like that does happen. Look at the spiders coming in here. Wow. That's a pretty impressive fall on the spiders. Even I'm impressed. I'll probably play a scalp off the 20 or the 50 MA coming in here, which is still a little ways away, but I will keep an eye on it. What a double top, though. I mean, this was the double top, guys. If you go right here to the daily chart from this pivot high right here, in fact, I can show it better on the intraday chart right here. Double top. We actually didn't even hit it, but we missed it by a penny. But look at this sell-off here. Wow. Let's see if the Fed comes in, guys. I'm telling you right now, the FOMC, the Federal Reserve, they're propping this market up. Every dip, we saw the markets flush here on heavy volume down to this area. And again, granted, it was going to get a technical bounce off the 200, but someone came in and just smoked it back up. And within 30 minutes, we were at the 52-week highs of this market. Shady action. But again, that's par for the course at this stage of the game. So fun to watch, fun to trade, kind of perplexing and scary for the average investor, I think, because they're the ones that are going to ultimately get screwed. Markets are getting a little bounce now, but really some interesting action here. I got to get going. I got to get back to trading into the final few minutes of the day. I will talk to you guys soon. Come join us here, 7-day free trial to inthemoneystocks.com. Take the 7-day free trial to the Research Center. That's for swing traders and investors. Take care.